You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means it is Wednesday. Time to roll on into the futures world. It is time once again for the Futures Rundown. My name, of course, Mark Longo, reminding you here at the top of the show, if you're just listening to the Futures Rundown, make sure you're listening to the full network wherever you're getting this show. And, of course, if you're ready to pull the trigger to go above and beyond, you want to join us. We already just did 2 back-to-back episodes with the other Dan Passarelli, talking all things options education. If that sounds fun to you, theoptionsinsider.com/pro is the place to go to get in on all that action. Congrats to Madam Gigi, our pro trading crate winner for the month of September. But now, speaking of Dan's, it is Futures Rundown time. That means we are joined once again by our good buddy, Dan the Man Gramza from Gramza Capital Management. Mr. Dan, welcome back to the Futures Rundown, sir.
Well, thank you very much, Mark. Great to be with you. Always exciting. It seems whenever we're together, things are always happening in the markets and especially in the futures markets. That's what always fascinates me. I'm never bored. There's always something happening someplace in these markets.
That is the nice thing about futures. You can always find something that's going on out there. So when equities are languishing and people are lamenting and vol is low and they can't find anything to trade, you're just not looking hard enough. You need to dive right on into the trading pits.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to the Trading Pit, the portion of the show where we break down what's lighting up our tapes in the world of futures this week. And before I start breaking down the upside and downside movers for the week, Dan, obviously, as you mentioned at the start of the show, it's another intriguing week. We are now about a week into the government shutdown, no end in sight, apparently. So apparently the markets don't seem to care. Unless you're in gold, in which case you're just blowing through. Weren't we just talking either on this show, Dan, or on the Futures This Week in Futures Options a few weeks ago about the 4,000 strike and the 4,000 and how it seemed kind of distant and maybe we could hit it by the end of the year? Nope, hit it this week, Dan. So gold is off to the races, but what is catching your eye out there in these wild futures markets these days, sir?
Well, we have a variety of things to think about when it comes to the markets. First, the stock market, as you mentioned, is somewhat ignoring, it seems so far, the government shutdown. But it's had some encouraging remarks from the FOMC in the minutes that there may be some interest rate cuts. So we're seeing some positive action in the stock market. But when it comes to the U.S. dollar, it is weaker against, the currencies are weaker against the dollar. The dollar is stronger in the euro, the Swissy, Mr. Yen. But when it comes to the Aussie dollar and the British pound, that's weaker. The Canadian dollar, that's a bit weaker as well. So we have in general the US dollar getting stronger. And that seems to not make sense if we think about what's happening with gold, for example. But if we think about Bitcoin, this is a market that's had a very good rally over the last few days. Looks like a little profit taking yesterday, looking for some up movement, follow through in that. Interest rate markets, we had the yields increasing, and so we're seeing a little weakness in the interest rate markets. And as we talked about, when it comes to the metals, they are off to the races. No sign of those slowing down. Copper, on the other hand, is a market that's gotten high enough to find some selling, but globally, there's some major issues in Indonesia with their situation with the mine getting shut down, unfortunately, people getting killed, and in Chile. They had an earthquake that had an impact. These are major producing areas. So we're going to see, I think, some potential upside in copper. Crude oil has gotten a little firmer. I have my doubts about that, but production's down a bit. Nat gas also, I'd be very cautious at these levels. I don't think we have the demand to support it. Now, when it comes to the grains, soybeans, they're positive because we're not seeing the results on the harvest that we thought. Corn also firming up a bit. So I look for some follow through there. Wheat is cheap, but fundamentally, I don't think the pieces fit together to support that market to the upside, at least not at this moment.
Yeah, there's a lot to unpack there, listeners. So let's break down what's lighting it up to the light side and the dark side this week, and we can go deeper into some of these that Dan just touched on. Well, let's start to the upside, because why not? We'll keep things optimistic and positive this week. Number 5 to the upside this week, you could probably guess it's our old pal gold, hitting new all-time highs, hitting the 4,000 level. I think it was just on TWIFO a week or two ago. We were talking about these 4,000 calls and how it seemed December, maybe we could see that, an argument for that level by December. Not by this week, but that's where we are. Gold up about almost 4.5% this week. And then number 4, we've got our old pal Ether ticking back up this week, up about 4.5% this week. So just managing to edge out gold for the number 4 spot. Number 3, it's good old BTC, up about 5.25% this week. And then keeping it in the metals for the rest of our upside movers this week. Number 2, it's platinum, up 7.13%. And if you're saying, wait a minute, that's not the P metal I was thinking of. Number 1 is palladium, up nearly 17, really, up 16.2%. So just a wild week here for palladium on the futures rundown. So a lot to unpack. Dan, we've said it before, there's a bit of a narrative so far for this year, whereas if you just threw some precious metals and some crypto in your wallet, you're looking pretty good right now, sir. It's been a good run for those.
They sure have been. And what's interesting is, those markets, especially the palladium and the crypto, they are markets that move on anticipation. Fundamentally, we're not seeing strong drivers in palladium. And when it comes to Bitcoin, it is going up because people want to buy it. It's not like we have a shortage of Bitcoin and fundamentals are driving that market. So the ones that you mentioned here, Mark, are really interesting because when you look at, do they have fundamental support? And we really don't. So how far will they go? Well, they go until people stop buying them, until everybody's had enough. Right? That's one of the reasons why you see a market slowing down. If you do a survey and say, does anybody want to buy more? Everybody goes, nah, I got plenty. Well, that's a sign the market could be slowing down. But right now, in the complexes that you mentioned, we don't see that happening. They're not slowing down.
Dan, since we're talking about the shiny stuff, I want to get your thoughts on this. This was our question of the week from last week, and it just expired a few days ago. So hot data from our audience listeners. We asked you a question a lot of people are debating right now. We're just talking about gold hitting new all-time highs almost literally every day these days. So that's usually a scenario where the market is telling you maybe they're a little bit skittish about something. There's some uncertainty out there. You're not usually seeing gold hit new all-time highs when everything is hunky-dory with the world. That said, we are hitting new all-time highs in the S&P at the same time, which is kind of weird, which is also weighing on our old pal VIX, which is usually the quote-unquote fair gauge, usually the gauge of market sentiment people look to first. So it raises the question right now, VIX hanging out in the mid to high teens, not even high, really mid-teens, and gold hitting new all-time highs every day. Which one is the better gauge of market sentiment to you right now? And we asked this to our audience, Dan, last week, and gold kind of ran away with it early on. As it got closer to the close of the poll, VIX made a bit of a resurgence. Gold still took it. 57.6% of our audience saying gold is the better indicator of their at least market sentiment right now. 42.4% going the traditional path for the old fair gauge. Mr. Dan, what are your thoughts on that? Our audience clearly leaning towards gold right now as the better gauge of overall market sentiment, sir.
An interesting question, because you're right. Both of those are barometers that people look at. Well, when I let's look at gold. It's up over 51% this year. And if we think about the stock market, let's just look at that, which is also looking at VIX. Stock market's been stronger, implying that VIX should be going down. And that is what I'm looking for. Now, as far as a barometer of what's going on, I think the gold is a little bit stronger as a barometer. Here's the reason. If you look at a weekly chart or a monthly chart of gold versus the stock market, both of those are up, as we both know. The difference between the two is that if you look at gold, it's the rate of change that I look at. So has the stock market gone up? Yes. If you look at the gold over the same period, it is almost exponential compared to the stock market, which has been steady. So put it this way, if you drew a line below the stock market, comparing it to gold, it has moved around, about 50 degrees, maybe a little bit less. If you look at the rate of change of gold, drew a line below the lows for that same period based on percent change, that has probably moved at 80 or 90%. So the rate of change between those is different. And we haven't seen gold in this area before. So it is really unknown what to expect. However, vertical markets are very difficult to sustain. And gold could be approaching that vertical phase of the market. Now, let's go to the VIX. VIX is always an interesting barometer, and I'm looking for VIX to drop, to go lower if these relationships that we're talking about, if the stock market does continue to move higher, then we would look for those lower VIX numbers, which is what I'm looking for, really. It's still, I think, a valid reference, but I think gold right now, because of the way it's behaving, because of the way it's moving, we're seeing things that we haven't seen before. Just as a side note, when we think about gold, so what's causing gold to do this? Why? I mean, VIX is acting normal in the sense of how it's behaving with respect to the stock market. Gold, it's not typical behavior. But if you look at central bank, just them, central bank consumption or purchases of gold, it's taken off. Look at China's central bank. This month has been the 11th month straight, 11th month that China's central bank has purchased gold. Central bank purchasing of gold is a major driver in the gold market. And so to see that continue, excuse me, see it chokes me up thinking about this. To see that continue, yes, I expect that. And so why? Why do central banks need gold? The last currency that was backed by gold was our friends in Switzerland, and that stopped in 1999 when they joined the IMF. So, why are central banks accumulating gold? And they are, especially Russia, China, India, developing economies. Those are also buying gold. And it's not backing anything. I remember I was in Frankfurt to teach a course at banks, and I went over on lunch to meet some fellows who are economists at the Bundesbank, not for work, just I know them and we were going to have lunch. And I asked them, I said, why does the Bundesbank have gold? Is it psychological? Does it make people feel better if we know there's somebody's holding gold and maybe the central bank makes us feel better? Is that it? I mean, nobody knows the answer. They didn't either, but it was fun talking about it. But here's something to keep in mind, and it's the role of the dollar. So when it comes to looking at what is a better measure, I think about this. Central banks, if we have gold and I'm Russia or China, I don't want to use the doggone dollar. If they touch the dollar in a transaction, which 90% of international transactions will touch the dollar, it can be stopped. It can be held. That's why $300 billion of Russia assets are being held because it was done in transactions with the US dollar, and they can't get it back at this point. But if I say, I will pay you the equivalent in this many ounces of gold for this transaction, trying to stay away from the US dollar. So the role of gold is evolving. The demand for gold from central banks is increasing. And we've seen that over a number of years. So I think its role in the financial markets from a macro point of view is changing. And so maybe that gold could be a better barometer for us in terms of market perception. As you said, Mark, people think of safe haven. People think of something that will hold value. And gold theoretically does that. But I always think in 1990, when Saddam Hussein invaded Kuwait, you would think gold would have taken off. If you look at gold in 1990, it went sideways. And that's also the period that central banks were selling gold. I remember the Bank of England was leading central banks in terms of selling gold. But its role has changed. I still think both of them are important. But right now, gold may be having the edge in terms of a barometer.
57.6% of our audience agrees with that, Dan. Looks like some people in our chat telling me they voted for gold in our poll as well. So a lot of votes for gold out there. How do you feel right now, listeners? What is a more accurate reflection of what you think is going on in the market and indeed the economy right now? Is it gold? Or is it our old pal, the fear gauge? As we keep on rolling to the downside, where is there some fear? Where is there some red on the screen in the futures market this week? Let's start number 5 to the downside. Our old pal, Nat Gas. Dan, this is another one. We were just talking about nat gas not too long ago, and we were talking about, I think they were the 2 3/4 puts going out a couple of weeks, and we were talking maybe it could get down there. I think nat gas was at 3 1/4. It's hanging out around 3.5 right now, even though it's given up some of the ghost this week, off about 3.8%. But a wild week here, wild couple of weeks for nat gas. Looks like we're not going to be testing those 2 3/4 puts again anytime soon. Either way, nat gas, unless it really continues to sell off this week, off about 3.8% so far this week. Number 4, slightly edging out nat gas this week. It's our old pal, the yen, off 3.85%. Don't see a lot of FX creeping into this list very often, so that's kind of interesting. Number 3, it's one of our old pals. It's oats, off 5 3/4%. Number 4, it's OJ. Just when you think OJ can't give up any more value, listeners, OJ off 8 3/4%. And the big boy on the board to the downside this week is cocoa, which is interesting, off a little over 10, about 10.1%. Dan, we've got nat gas, the yen, oats, OJ, and cocoa. Anything catching your eye in our downside movers this week, sir?
Well, cocoa, if we start with them, globally things have improved. If you look at Ghana, Ivory Coast, Brazil, some of the pressures that we saw in cocoa has lightened up. Nat gas, that one I'm still suspect of. We're seeing it bounce up a bit, then it comes off a bit, it bounces up a bit. The inventory, is it building? Is it decreasing? Seems to be shaking that up a bit. Weather, remember, a third of nat gas is used to generate our heat in our homes and to cook our food. Another third is to generate electricity, and another third is industrial use. So it seems that one of the things that's having an impact on nat gas is weather. Is the outlook for some parts of our country to get a little cooler? We're feeling it here in the Chicago area, the difference. That could have an impact as we use more nat gas to heat our homes, for example. So it's shaky to me. This could easily also go sideways. International demand hasn't changed tremendously for nat gas, and we do export a lot of nat gas now because we have the ability to do it, and that's a new thing. Our friend Mr. Yen, I think that volatility there makes sense because they've had some political changes there. We've seen that in France also. And in Japan, they have a new PM. They've, changed a few seats there. So there's some a country that's very stable politically, maybe a little shaky right now as they try to sort out and get through the smoke of these changes that they've had. And I think that's reflected in that currency. One of the things when it comes to currencies, in a country that has uncertainty, typically capital flows away from that country. The other thing that a country can do to attract capital on a currency point of view to add demand is interest rates. And so as interest rate changes in the currency market, so does the carrying trade work. And that's trying to capture the interest rate differential between different countries. So that's also at play when we think about our friend Mr. Yen. Oats, when it comes to the grains and orange juice, we're not seeing yields that people expected. Soybeans are up because the yield that we're getting from our harvest isn't as high. The sales are not as strong. And remember, there's alternative. So when we think about beans and corn and wheat, other ag markets, it's also a global situation. And I think it's reflected in the oats that we're looking at, which is primarily domestic consumption. So I don't think there's anything here that is out of alignment, put it that way. If you think about the price action that we've seen and some of the fundamental, basis for some of these decisions, counter to the crypto market, these markets, all of them, have fundamental characteristics. Although I would just say one last thing, Mark. When it comes to a trading point of view, fundamentals to me, I want to have a feel for what's going on fundamentally. What should it do? What is it doing? Why is it different? I'm interested in that. But when it comes to making a trading decision, it's price. Price puts money in my pocket. Price takes money out of my pocket. Not a fundamental that says point 0.6 when it should have been point 0.4. So price is the final determinant that I look at to try to give me a feel for what's happening with the market.
Dan, I'm a little offended, I have to admit, that you say there's no fundamental argument for crypto. You're saying there's no fundamental value to Tron and Shiba Inu? How dare you, sir? How dare you say such words on my airwaves?
Yes, that is what I'm saying. But it doesn't mean, though, Mark, going to your point, that if people want to buy it, if people perceive it going higher, then we're going to see prices moving higher. When we see the change in the crypto market, gosh, just think, Mark, a few months ago, a few years ago, if we were talking about it, totally different today. We see support for regulators. We see support from central banks. Almost all central banks are reviewing, should we have a crypto? So you see support in Washington. You see support politically. We see new products developed like ETFs that we didn't have in the past, and the idea of a stable coin or tokens coming into play. So its position from a trading point of view really has changed. And so it gives it somewhat of a legitimate structure. I think the biggest change, which has affected all the cryptos that you just mentioned, was when they allowed the ETF on crypto, on Bitcoin. That was the game changer. We already had it on futures. It provides now at that point place for option market, or not only option, but market makers to lay off risk. We got another product. So when I make a market in this futures market, there's an ETF to lay it off on, and vice versa. And so I think that was a turning point.
That was indeed. Listen, let's see how these markets turning out there today. Let's find out. Is it an active day in the futures world? Let's find out, listeners. We usually use that barometer, that threshold of it costs you about 300,000 contracts to break into the top 10. If it's more than that, it's a decently active day, and we are there right now, listeners. Number 10 is actually our old pal gold, the subject of much debate these days. Number 10, gold. We don't see the metals sneaking onto our top 10 most active very often, so you know something interesting at least is afoot in gold right now, making it all the way there at number 10. 317,000 contracts. That's what it cost you to break into the top 10 today. By the way, all of our most actives today, all December, all the time. So nobody cares about October or November or anything else out there these days. It's all end of the year, all the time. Number 10, Dees Gold, 317 on the tape. Number 9, going out to the rates. It's the 30-year, 337,000 contracts on the tape. Number 8, it's the NASDAQ E-mini, 347 on the tape for them. Number 7, it's the Ultra 10-year, 367. A lot of sevens on the tape so far today. Number 6, the 2-year note, 379 hour, where, well, there still is a 7 in there, but we are breaking the trend of ending with 7 at least. Number 6, the 2-year note, 379 on the tape, listeners. Number 5, the S&P Micro, 658. Now, there we go. No more 7s there, listeners, for number 5. Quite a jump also from number 6 to number 5, closing in on 300,000 contracts difference. Number 4, it's the 5-year note, 784,000 contracts on the tape. Number 3, it's the big dog S&P E-mini, 797 on the tape for them. Number 2, it's the NASDAQ Micro, 1.02 million. That means the big dog, once again, it's the 10-year, 1.17 million. Again, a lot of 7s. We're dominated by 7s. Mr. Dan, are you seeing lucky 7 in our list of top 10 today? Anything catching your eye? I mean, we've already talked about gold. Obviously, a lot of rates and equities still in our top 10. Anything catching your eye out there today, sir?
I think it's logical, is my feeling, Mark. The interest rates, the attention on what happens with the Fed is such a critical part of our economy. And I so seeing the 10-year at the top, I don't think it's too surprising. And you also have people out there hedging. You have institutions that are planning ahead, and they have clients that have certain expectations to meet those clients. That adds a lot of liquidity in that marketplace. We think about NASDAQ, that was number two. We look at technology sector, we look at the index overall, we look at, again, the minutes that came out today. It says, well, maybe we should have a decrease in interest rates, 25 basis points. A few people say 50, but 25 basis points. And maybe we should have two of them before the end of the year. So October and December. So those, yeah, it seems like we're seeing feedback from the Fed in terms of expectation, and that supports the market's expectation. Oh, lower interest rates, the cost of money, more expansion adds liquidity to our economy. So that expectation's built in. So I think these are markets that not only look at what has been the past in terms of data, fundamentals, but they also focus on their forward thinking markets. And we're getting some feedback that seems like forward thinking is positive for interest rates going lower and for the stock market expanding as capital becomes available. And the thing there, which I don't see on the list, and I thought we would today, is the Russell. When things look positive for our economy, the Russell index has a tendency to lead. And the reason is that small to mid cap companies, their access to capital is not the same as the large cap stocks in the S&P 500, for example. So interest rates typically have more of an impact there. And but we don't see the Russell on the list here that you mentioned.
I just checked for you, Dan. If we expanded our top 10 to a top 20, it would be number 20 on our most actives today at 100,000 contracts. So not quite breaking into the top 10, but if we did a top 20, it'd be there for you, Dan.
Interesting. Thank you.
You're welcome. Ask and you shall receive, Mr. Dan, as we keep on rolling out to what's lighting it up, not just today or indeed this week, but all year long. What trends are shaping up? I think you can already guess a few of them. We talked about them this episode and quite a bit recently. The trends of getting long crypto and precious has been a pretty good one so far this year. That continues this week. That said, well, you'll see when we get there, listeners. Number 5 this week, listeners. It's our old pal, feeder cattle, up about 39.25%. Again, a lot of that coming in the last month and change. We've seen a crazy run in those livestock markets of late. We talked about it here. We talked about it on This Week in Futures Options as well. If you've gone to try to buy beef in the supermarket recently, you see what a decent steak goes for these days. You felt that. Number 5, it's feeder cattle. Number 4, it's our old pal gold. Let's talk about this all episode. We could spend many episodes. Gold up 47%. Think about that, listeners. Gold, the major economic barometer that it is, the underpinning, at least psychologically, as Dan pointed out earlier in the episode, for our global economies. We still cling to gold for a variety of reasons. Again, a lot of these psychological. Either way, that massive bellwether for economic health, vibrancy, all sorts of things, up nearly 50% this year, 47%. That is absolutely wild. Who had that on their bingo card to start the year? Well, certainly the gold bugs did, and they're laughing all the way to the bank. Number 3, keeping it in precious, it's palladium, up 59.25%. Number 2, it's our old pal silver, up nearly 60% for the year, so outpacing gold by a healthy margin. That means number 1 is keeping it in precious. It's platinum, up 80, almost 81%. You notice I slotted ETH out of there. Our system is kicking out a weird number of 143% a year to date for ETH. That is not correct. Our guest speculated last week on the show that is measuring that from the actual bottom. That's not correct either. So I think most platforms have ETH up around 35 to 40%, which would put it maybe at best at the number 5 spot right now. But either way, a wild run here. Dan, we've talked about most of these. We haven't really talked about feeder cattle so far this year. It's having a good year, most of that in the last month and change. Again, Dan, if you tried to buy anything meat-related at the supermarket, you felt this pain, sir. What are your thoughts on feeder cattle on the rampage, sir?
Well, here's the thing to think about cattle or meats is it's an interesting cycle because that's what we look at. If you're raising cattle and if you're the farmer and you birth the cattle, then you send it to a feedlot at a certain weight, and then when it gets to another weight, it's sent for processing. So that would be the typical cycle there. But along the way, we got to think about what does this stuff cost us to feed? And if you look at the cost of animal feed, that can have a big impact because if it costs us more per pound to create that, to get a pound of protein of meat, we can't do it. We'll have a losing business. So what happens? Well, we send them to process sooner. So not our ideal weight, but a weight that's less than that. And what does that do if we're processing cattle sooner? It shrinks our herd that's available. And if we shrink it too much, we're really going to feel it in price because there's not going to be a lot of it. So to go from a calf to a processed head of cattle, you're looking at about 2 years. So the cycle, if you shrink it down and slow it down, it doesn't just start up again. It's going to take a while to have that impact. And I think that's something that we should be sensitive to what's happening with beef. But what's interesting too, Mark, about beef is it has elastic demand. In other words, if beef prices are really high, what do people do? They may continue to buy it because they really like it, or they say, I don't know, pork is pretty good, and so is chicken. So that we have other sources of protein besides cattle. That has an impact also in what we're looking at here when it comes to that marketplace. It's really an unusual cycle because it is so long. Chickens have a relatively short cycle. To go from an egg to a little chick, for example, is 21 days. And I remember being at a chicken producing facility, and they had these incubators and they could move the eggs a little bit and they had the right temperature, and it was the perfect growing conditions, or I guess for these little chicks to hatch. And I remember the manager saying to me, we can do everything to adjust a parameter, but we can't change the 21 days because that affects output. So that cycle we see for cattle, it's not surprising to see these prices up here. We've been up here for a while, by the way, and it really started back in August. We're at those levels that we've seen here over the last few months. So it takes a while before you and I feel it when we go to buy that meat. And that's what we're seeing here.
I certainly felt it
and
when I was glancing at the butcher's counter last week, Dan, just for curiosity. I was looking at some steaks and I thought, wow, You're right. Chicken and pork are great alternatives.
Yeah, yeah, and it's right now, prices are higher for you mentioned feeder cattle, that's up here, and, we don't see any sign that it's gonna be slowing down. It's what's gonna be interesting about it, I guess, from my point of view, from a, um, activity point of view, is if it stays in this range, and what's gonna be important is next week. If we get follow through on Monday, Tuesday, Wednesday higher, we could potentially have another leg to the upside. So we haven't seen the high yet. If, on the other hand, we trade lower, if tomorrow we back off on this market and we go into the weekend weaker, for example, on Friday, and that means we would be trading below 365 per hundredweight or $3.65 per pound. This trades in 100-pound increments. But if it backs off below that, that is a potential bearish high. So if tomorrow we back off and Friday we close weak, there we could see a high in this market. So I think the next 3 days, trading days, are going to be important for that longer term trend when it comes to our friend feeder cattle.
All right, we'll keep an eye on that. Maybe some potential relief at the butcher's counter, according to our buddy Dan. As we keep on rolling, let's go out to downside movers for the year. What is giving up the ghost so far this year? Number 5, listeners, it's our old pal lithium, off 19.6% for the year. Number 4, a rough year for rough rice, off 22.3%. Number 3, it's cocoa, off 35.2%. So if you're tired of paying through the nose for coffee, maybe you switch to some hot cocoa in the morning, then cocoa's looking cheaper for you this year. Also, if you like to put a little cash settled butter on your toast in the morning, that's off 38% for the year. And rounding out our breakfast table, you know it, you love it, it continues to get cheaper. It's our old pal OJ, off 52.3%. So Dan, if you're down for a little delicious breakfast of OJ toast with butter and some hot cocoa, I guess you're a happy camper so far this year, sir.
Yeah, it sure seems that way. There are also all markets that really are sensitive to that global situation. For example, cocoa, it's and like coffee too. It only grows in a certain band around the equator. So if you look at all the countries that produce cocoa, you're not going to find them in the north, or you're not going to find them in the south. We were talking about gold before. Gold is produced in every continent except Antarctica. Coffee is that band around the equator. That's it. And for cocoa, a lot of it, especially for Europe, is produced in the Ivory Coast and Ghana. I had the chance to do some courses with the government of Ghana, and they produce a lot of cocoa, major producer of cocoa. Also, gold. We've been talking about gold. They're number 6 in the world for production of gold and crude oil. So it's cocoa's a unique product in terms of how it's produced. And OJ, that one, I haven't traded that in a long time, but it's an interesting market. And the challenge can be getting in and getting out. I'm not sure how much liquidity there is on the options for OJ, but it is another interesting market that people oftentimes don't think about.
Not much liquidity at all, unfortunately, pun intended, in the world of all things OJ, Dan.
Yeah, kind of typical for that market because a couple things. One, it's not a highly industrialized product that's used in a broad number of areas. And the production of OJ is also relatively narrow in our country. And we got Florida and we got California, but you're not going to see it in North Dakota. It's not a broad produced product. So that has an impact. And obviously, it's very sensitive to disease and to weather.
Well, Mr. Dan, we are unfortunately sensitive to time on the show. Hard to believe an hour close to it flies by when we're having fun talking futures. But before we go, sir, we covered a lot of ground on the show today. We talked just about everything, including, of course, gold, but equities, feeder cattle, you name it, OJ. But before we go, Mr. Dan, if there's any product we left off the docket today that's really catching your eye, you want to take a few minutes to discuss here at the end of the show, have at it, sir. The floor is yours.
Well, thank you. I guess the only complex we did kind of touch on it would be the currencies, where the U.S. dollar is fitting in, and it's getting stronger. And it's interesting because currencies are a barometer of risk. As confidence in a country grows, as stability politically, interest rate wise, we'll see demand for currency to go up. And right now we're seeing that for the US dollar. So I think the currencies could be an interesting market to keep track of over the next few weeks.
Yeah, we know things are getting wild, Dan, when currencies start making it onto our show. When FX gets volatile, things are usually spicy out there. That's going to do it for us on the Futures Rundown today. Not going to do it for us on the network today, though. If you're hanging out in the Pro, just hang out. We'll be back after the closing bell to break down all the days' worth of activity in the options market with the newest addition to the network, the Hot Options Report. Of course, if you want to get access to all that fun, you want to join us for our awesome, it was more of a secret demo yesterday, a pro Q&A as well. It was awesome with our buddy, Mr. Nick Howard. He's doing some cool new stuff on the equity options front, and he wanted to share it with our pro folks, give them a free taste, a free bite at the apple, if you will. They're still working. There's going to be a video version of that, I think, as well for you folks. They're still working on getting that uploaded for you. So if you wanted to see the video version of it, stay tuned for that. Only place you can find that, listeners, theoptionsinsider.com/pro is the place to go to learn more. And Mr. Dan, where should they go if they want a little bit more Dan Gramza in their lives? Oh, by the way, I should mention our chat. Deeply disappointed in you today, Dan. We talked for nearly an hour, dozens of products, not a single big adios among them. You have broken the hearts of many today, sir.
Well, I'd say this when it comes to the big adios. Even though we're talking about gold taking off and moving to the upside, we do want to be sensitive to that, because the faster a market goes up, the faster it can come down. So we may have a big adios. I don't see it anytime soon, but who knows that we're above these levels where we are, Mark.
50% in a year. I mean, that's a year to date, even not even a calendar year. That's wild. I need to go back historically, Dan. Can you think of another year that rivals this so far year to date, sir? 50%?
Possibly. And it would have been, I would say, in the 80s. If you look at like 1980, 81, gold had a spurt there, and so did silver. So percentage-wise, the number was a lot less. But percentage-wise, it may be near there, I think.
Is that when the Hunt brothers were doing their shenanigans? They were driving things up? Yeah.
That's right. Hunt brothers were doing the silver thing, and silver got up to like $35, I think it was, at that point. But that was historic. That was as high as it's ever been. And So percentage-wise, that may be a time.
So I guess we can say outside of cornered markets, this is the first time we've seen this in at least a somewhat normal market for
Well,
the
you may
metals.
be
Who
onto
knows?
something there.
Maybe someone's
Yeah.
trying to corner gold. Kind of hard to corner gold at 4,000, I think. But
Yeah, I
if you
think
got
so,
the
too.
pockets for that, more power to you. And meanwhile, Mr. Dan, if folks want to get some big Adioses of their own or check out some of your cool vidges that the kids are all excited about, where should they go? What should they do?
Well, they could visit dangramza.com. There are a free daily video. It covers 22 markets. I select different markets to take a look at, and it's free. It's looked at in over 150 countries to my total amazement. And sign up for it. You can get a email every day that tells you when it's posted. There's also a course there that describes the techniques that I'm using and also the trade management techniques that are used in those videos, because they show red and green lines, buy and sell levels, not recommendations, just ideas that I want to share. And you can look over time, over the last 10 years, to see how those lines have changed. And there's also a more in-depth video as well.
There you go. Check it out. Dan Gramza, GRAMZA.com, the place to go to kick the tires and light the fires, at least until we get a hold of dantheman.com. Someone's squatting on it, Dan. They won't give it to me. We'll get it for you, though, one of these days. In the meantime, listeners, dangramza.com, the place to go. We got to get on out of here. Back again in a little bit to talk all the hot options, lighting up the tape today on the Hot Options Report. Back again tomorrow for the option block, as well as very much the sister program to this one, This Week in Futures Options. If you're not listening to both, man, you are missing out. Yet another reason why you should be subscribed to the full network. And of course, when you're ready to go above and beyond, join us in the Pro. It's a good time. TheOptionsInsider.com/pro. And we're back again next Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.